This is the problem with life. It's only in reflection where you look back and go, did I do the right thing? Did I say the right thing? Did I get the right result? Because in the moment, you never know. So all you can do in the moment is prepare yourself for trying to be the best version of yourself and understand that there's really no rules other than success.
From finding clever ways to clear your parents' walnut orchard to building a business that you sold for $151 million, 77 times EBITDA, to now going from an idea to building a company in 5 years that's produced over $500 million of revenue, Brandon. How did you create that 9-figure mindset? What is a 9-figure mindset, and how did you create that?
Yeah, well, it took me 30 years, right? So people want to. They talk about wanting to become worth 9 figures, 100 million or above. And they talk about it, but a lot of the younger generation doesn't quite have the patience for how to get there, because unless you're going to follow a specific blueprint from somebody who's actually done it and is going to show you how to do it, you have to do it through trial and error. It's very difficult. Trial and error is a very slow way to do things. So I did trial and error. But I was smart after my first business and having my private equity guys sell it premature. And then I had to start over. And that time around, I was like, if I'm going to rebuild another company, I'm going to pay attention to exactly how I did it. Because if I do it right, I can actually create my next business after that, teaching everyone else how to do it right. And so that 9-figure mindset was idea number 1, rebuild my next company. Idea number 2, if I build it, create a set of rules, become an example, I can teach everyone else how I did it. So I did number 1, sold for $151 million. And between 2009 and 2019, basically, I hired 2 research firms and looked at tens of thousands of businesses, what allows them to succeed, what causes them to break, what allows those that broke to get rebuilt, and dialed in an exact process that I follow. And that process has allowed me since 2019, after Natalie and I partnered, my wife, with Grant Cardone. In 60 months, we've built basically a $250 million company with no invested capital, no debt, just growing it organically, working against the methodologies we teach.
Yeah, one of the things when I studied you, you've become a master at reverse engineering markets, businesses, and then very quickly implementing that. You know, you did it in the audiology space. You were really able to see this opportunity and take these stepping stones. But like you said, when you created that 9-figure mindset, it happened over 30 years. There's a story that you tell of when you were actually going after your first business and you're trying to raise your first $1 million. You had this idea and you were trying to raise your first $1 million with Sonos, I think it was, right?
Yep.
And you had a partner and you were going to raise it, and you'd done 23 presentations, 23 no's, 23 presentations. And you tell the story where you were going into your final presentation, your 24th presentation, and there was a lot of challenge, pressure, anxiety. You actually talk about when you were driving over there late night, you pulled over and you were in tears because of the pressure. Yep. You had 23 no's because of the pressure. And then when that presentation was happening, your business partner during the presentation was doing his piece, and you were feeling this room. You're sitting in this room, your business partner is pitching, and you could feel this idea of, you could feel the investor losing interest, and you took this drastic moment. There was this, what I would now call a pivotal moment in time. You took this drastic step. Can you tell us about what that was and why you did it?
Yeah. I was looking at him and he was falling asleep, and I was letting the chairman run the process and one of my board members. And I was sitting there thinking, here we are again, same show, same deal. And so I just slammed my hand on the table and said, Raul. He looks, and I said, and Doug looked at me, and the broker looked at me, everybody looked at me. And I said, look, there's 2 ways we can do this. We can sit and go through this deck, which clearly is boring you. I mean, because I know you get up early and you work hard, and we're not saying anything that you haven't heard 1,000 times. Or I could just show you that I could buy as many businesses as I want that are doing between $1 and $3 million in revenue for 1 times profit, and get a business that has $500,000 or $1 million of assets that's been in business for 20 or 30 years. And I could buy as many as I want to buy, but no one's going to believe it or understand it unless you see it. I'm going to go look at one tomorrow morning if you want to ride over, and I'll go through the numbers with you and show it to you myself. And he was a little stunned. His broker says, "Oh, that's not how it works." Doug, my chairman, was upset. Hugh was like, "Oh, you can't, Brandon, you." And Raul thought about it for a minute, and he goes, "Let me think about it." And I said, "I want to be respectful of your time." I wasn't rude about it. I just took control at that moment. We walked out of that room, and my chairman lit me up. Oh, he was like, this is a small town. We were in Vancouver, BC, North Van. It's a small town. Everybody knows each other. You can't act this way. You can't treat these. Raul's got $500 million. You can't talk to him like that. I said, I did him a favor. I cut off having to listen to you for another 30 minutes. and then that pissed him off even more. I'm not going to help you if you're going to act this way. Maybe I made a mistake by doing something with you. And I'm like, okay, whatever. That evening, I got a phone call from Raul who said, pick me up in the morning. And I went and showed him the business, and he told his broker. I drove on the way there, and he and his broker sat in the back of my car. When we got done looking at the business, Raul said to his broker, drive his car, and sat in the back seat with me where we went through the financials. And that night, he wrote me a check for $1 million.
Yeah. Why I love that story so much is there's often these pivotal moments, right? You went with your gut against what everyone would say you would do, against the playbook, against what's advised, against even people that you cared about getting upset with you, but you followed your gut. And that pivotal moment gave you the first $1 million, which led to then $6 million, which then led to you becoming one of the youngest to go on to the stock exchange, right? At 29 years old. That's that move. If you didn't make that move,
that first move, who knows about the
rest, right? And so, I love that. I think that when I hear that, I know sometimes I'm in these pivotal moments, and maybe I don't speak up or I hold back, and that might be the difference between me getting to where I want to go, going to 9 figures, or not.
100%. What I can tell you is that it's only in reflection. This is the problem with life, right? It's only in reflection where you look back and go, did I do the right thing? Did I say the right thing? Did I get the right result? Because in the moment, you never know, right? So all you can do in the moment is prepare yourself for trying to be the best version of yourself. And understand that there's really no rules other than success. And so when people go around telling you what you can't do and what you should do and how you should do it, if they hadn't actually done it, you probably shouldn't listen to them. Yeah. And if they had done it, but they're trying to do it and it's not working for them, you should probably try to do something a little differently. And the way you do that is you increase your attention, your awareness to what's going on. So when I looked at Raul and saw him eyes roll back in his head, I'm like, okay, I've sat through 23 of these. I know how this ends. Thank you very much for stopping by. We'll take a look at it. We'll contact you if we're interested.
Yep. And it's a no.
It's always a no.
Yeah. It's always a no on that. Brandon, what about one of the things that I also really admire about you is the way that you look at things, both through the lens of opportunity. When you had the football team come and pick the orchard, right? That was a great lens of opportunity. They needed $1,000. You needed the orchard picked. Boom, entrepreneur opportunity. But also just how you creatively look at a business structure. With Audigy, one thing that you did, and I don't know how popular it is, but to me, this was the first time I've heard of somebody doing a reverse consolidation and really going around and saying, hey, there's a ton of opportunity here. Let me go and pitch this out to all these groups and create this business model. Can you talk to us about what that reverse consolidation is and where that idea came from for you?
Well, because I was a consolidator, so I had to go raise capital, hence the $1 million, $6 million, $18 million, $10 million. I had to raise capital, then spend the money to hire executives and employees and to acquire businesses. And it's very difficult to acquire enough businesses fast enough that you're not burning capital, which is why a lot of companies will talk about, oh, it's okay as long as you're growing fast to deficit finance or forward invest. And they use these terms that mean you don't make any money.
Yep.
It's very dangerous. Why 97% of all businesses fail. In Wall Street, what Wall Street wants to create is a platform company. And a platform company is a company that's between 125 million and 200 million, and it makes 20% a year. And it's big enough that it has at least 12 executives that know exactly what they're doing, centered across strategy, marketing, promotion, sales conversion, delivering on the promise, operations, people, and how to align them with the opportunities and incentivize them and keep them. and then you have leadership. They've developed the leadership. They have the data. They know what they're looking at. They have the technology systems, and they understand with sophistication where to invest the money that they make. Okay, so that would be a platform company. So it's a whole company, and it works.
Yep.
Because the idea is if you have that by vertical, by industry, then you can go buy all the 5 and 10 and 15 and 20 and 30 and $50 million companies that don't have it, and just add them to either bolt them on, tuck them in, or consolidate them into your operations, right? And so a platform company is highly valuable because then you can go buy all the little businesses that don't have those resources, and you can add them to your cost structure, and so it's very profitable. And you buy them cheap. The little business is cheap. Knowing what a platform company, I had this idea. What if I could create a platform company for the small business owners, but I didn't own their business? And what if I made them my partners in my business? So my sales pitch would be, I'm going to create a management company that's going to operate like a platform company with the sophistication of the platform company. I'm going to then let you tap into it on demand for the things you need based on the size business you have. And I'm going to go do that with 250 other people. And we're going to build all these resources over time based on what the group needs in order to be the dominant player in your marketplace. And I'm going to give you equity in my management company in exchange for a management fee that you pay each month that will pay for these services I build. And then you're going to give the management company a little upside in your business along with 250 other people, so that when we win as a group, we'll be valued at the multiples that big businesses are valued at. Now, if you're a $50 million company and you're making $10 million a year, you're worth 5 times to 7 times your earnings. But if I put 20 $50 million companies together, we could be worth 20 times our earnings. So going it alone and staying small is never a good idea. And that's why Wall Street, anything over $1 billion starts to get Wall Street attraction. So now you could go public, you sell at a higher multiple. So being small by itself keeps you small. So you really don't even need to do anything. It's the whole thesis of consolidation is you just take $1 million businesses that you're buying for 2.5 times their earnings. And this is what Heartland Dental did. They went and bought 1,000 dental practices doing $1 million each, paid 2 or 3 times earnings, and then they sold it for $1.4 billion to the Teachers Credit Union in Canada as $1 billion company, which was like 25 times earnings. So they just played the arbitrage, right? That's what Wall Street does. So I was like, if I could play the arbitrage, but instead of the money going to Wall Street, it stayed with the business owner, it stayed with me, it went to our collective teams, and it cross-pollinated all the business owners, so all tides lift all boats. And that was my theory. But I was told I couldn't create an equity structure. The SEC declined what I was trying to do. And I finally, after 8 arguments, I got it through. I had to get around franchise law. That's why I tied everybody together through the management company, because then we could promote together, we could make money together, we could cross-train together. So I had to get around franchise law, I had to get around SEC requirements, and I had to get around all these taxation issues. So it was a complicated structure. I didn't realize when I thought of it, it was going to be that complicated. But I navigated through it and launched that business in 2005. And when we sold in 2016, I wired $38 million out to my customers, $17 million out to my employees. I kept the difference. And yet our clients that we were partners with were 3.5 to 15 times larger than their peer group. So we got the economies of scale as a group. They got to keep their businesses and eventually sell them for the highest prices ever paid, which benefited us as well. So it took a bunch of small independent businesses and it bound us together, and I call that reverse consolidation. What I didn't realize I had created, because now I work with David Wield, so he wrote the Jobs Act under Obama. And he's the one that changed Reg A and all the regulations on what you can do with capital structures and money and all this stuff. What I created was the first decentralized, democratized, reverse consolidation platform that people have been trying to do on the blockchain now for the last 3 or 4 years and running afoul with the SEC. So I created that. He wrote a white paper and is signing off on it because we're doing some other creative things together. Now we're going to do it with dozens of verticals but we're going to use the blockchain and we're going to use the new regulations to do it. So I can do it bigger, better, faster, more valuably. But anytime you can pool the synergies, efficiencies, economies of scale, horsepower, brain power, manpower, and you can get it synergized as a team. Because think about it, if you're a business owner in Florida and you hire somebody to come to work in your business, say you hire Sally, and she comes in, and Sally is your business manager. And Sally's been with you for 6 years. And Sally's running the sales team, the delivery team. Sally is an expert, and she's operating on the methodologies we taught you as one of our partners. And you're operating on the systems that we put in place. And all of a sudden, say Sally's husband is a doctor and gets transferred to LA. Traditionally, you would lose Sally. Sally would have to go get a new job because she left with her husband. In our system, what started happening is as these businesses ebb and flow and get bigger and bigger and bigger and lose people that we've trained, they would just go to another one of the businesses we manage anywhere in the country. It was a great score for that business. And what was then happening is people in different markets, when they were running recruiting and people would apply for those jobs, we started interviewing everybody. And we'd say, well, we also have openings in these other 18 markets that do the same thing. And people would pick what market they want to go to. Well, as an individual business owner, you're either going to hit or miss on that employee. And if you train somebody up and they leave, you're done. So we were able to create this ecosystem where everyone was exchanging inside the ecosystem. And then Sally could still train the new replacement in the business in Florida because she was still in the same system. So we would do peer-to-peer training using our system. So Sally, you would go hire your new employee, Sally would train him for a few weeks, and then that employee on our CEO platform would have direct connectivity into Sally using the same best practices, the same everything. And so Sally could take time to chat with her, send her documents, open documents, show her what she's looking at, all in our technology. So you never lose the horsepower of the people. And every great business is only built by having great people.
Yeah, and I know that even Odyssey, when you went and when you were looking at it, you were at a Ferrari dealership, I believe, and your first employee you picked up right from there. Mason was it?
Yeah,
Mason, right? Yeah. And I remember those stories, and I remember, you even having those conversations with him and your role as a leader, developing him, even in the delayed gratification on some decisions he had to make. Yep. If he wanted to drive that car, that fancy car, now have the fancy apartment, now he wasn't going to be part of the vision. But that delayed gratification ended up landing him $10 million when you did so.
Yeah,
right?
he became the president of the company.
One thing that you talk about, and I really believe, is that your beliefs shape your business. And if you study what you had to go do in your company and in what you had to go do to actually get this reverse consolidation done, you had to go to all these different business owners, and they're probably doing pretty good. 3 million, 5 million, 10 million, right? They're running their operation in some sort of way, maybe 1 million. And you had to work with them to change their beliefs so that they could change their business. What are some of the ways that you approach that, and why do you think that people have limited beliefs when they're going for something?
Well, first of all, let's just look at some statistics. There's 33.5 million small to mid-sized businesses. Those are businesses under 100 million. So there's a lot of them, 33.5 million. 97% fail every 10 years. 2/3 fail in the first 5 years. So the success rate over 10 years is only 3%. It's not very many.
No, it's not.
So what causes businesses to fail? Stress, friction, resistance, fear, anxiety, market changes, regulatory changes, and then a whole bunch of just screwing things up.
Bad cash flow.
Yeah, just screwing it up.
Yeah.
Like don't know how to promote, don't know how to convert, don't know how to add people, lose good people, don't know how to manage the finances, don't know how to do the books. Like these are all things that cause businesses to fail. So when you look at the width, and it's a $16 trillion space, it generates 45% of our economy.
Yeah,
hires 67% of the workforce.
Small businesses, yeah.
It's so critical.
Yeah.
And nobody's ever focused on helping these people. And so now if I'm a business owner, I'm either going to try to hire a consultant. Most consultants aren't successful business people. Okay, they're just trying to trade time for money.
Yep.
So the first thing I'd say to a consultant, if I wanted to grow a business that didn't depend on me, I'd say, how many employees do you have and how big is your consultancy? If they're like, oh no, I work by myself, I'd say, get out of here, because I don't want to work for myself.
Yeah.
If they knew how, anybody that knows how to have an army of people working for them would never work for themselves again.
Of course. Yeah.
Okay. So like they get horrible advice. They go to their local accountant. Let's say I'm a local accountant. I'm doing 50 businesses. And I go to them and say, well, we got through this year. How much should we grow next year? We surveyed 10,000 business owners and asked, when you think about growth next year, how do you pick your growth target? 45% of those business owners said they just want to stop declining, let alone they can't even think about growth. If you think about it, that's how almost half the businesses are in decline.
Yep.
Okay. And then there was two other responses when we asked how much are you going to grow next year. One was some dollar amount. They'd throw out, I want to add $1 million or $5 million or whatever. The other was a percentage. I want to grow at 8% or 12% or 15% or 30%. They would pick some percentage. So the declines were obvious. They're in trouble, right? So we would go back to the people that picked the percentage and picked the dollar amount. We asked a follow-up question, which is, when determining that percentage or that dollar amount, how do you formulate your thought relative to it? And we got 3 answers. It's what I've always wanted to do. It's what someone told me I could do, or it's what we've done historically. There was no other answers. So when we asked who were you getting your advice from of how you should be doing it, most of them would say my accountants or my peers. Well, let's just take the averages of 100% of the businesses.
Yep.
45% are in decline. They're not even thinking about growth. They're thinking about survival. The other 55% are stuck at 3 million. Of the 55%, 98% are stuck at 3 million or less, and they're not making any money. So if I'm an accountant and I have 50 businesses, and I have one client that's grown at 20%, and my average growth client is 8%, and then I have half of my clients are in decline. And you come into me and say, how much should I plan on growing next year? What do you think I'm going to tell you?
Yeah, if I'm just an accountant, probably the average 8%.
Yeah, 8% would be good.
Yeah.
Now, I'm going to give you scenario B. Whatever business you're in, you're sitting in a room with 50 people in exactly the same business with very similar markets. So in any particular market, you have 2,400 variables within the average 4-wall business. A single location generates 80% of its revenue from 3.8 miles or 22 minutes. There's 2,400 variables. Okay, I know that because we've engineered $10 billion in businesses. But the average person doesn't know that. Yeah. So let's just say you live in a marketplace, population 100,000, and you're sitting in a room with 49 other businesses, population 100,000, doing exactly what you do, HVAC, plumbing, same kind of business, right? And you're sitting there, and everyone's posting their growth on the wall. One guy gets up or gal gets up and puts 100% growth year over year. Somebody else goes up 98%. Somebody else goes up 95%. And you watch this out of 50 businesses, and it gets down towards the bottom, and the bottom is 22%. And you're sitting, based on the advice of your accountant, at 8%. Would you think that you're doing good?
No.
You would think, I suck.
Yep.
You'd also think, I need to listen to somebody else. And this is what we started doing across the 10,000 businesses. So now we've got 250 HVAC businesses, $250 million in pool and spa businesses, 180 million electrical businesses. We've got 400 million roofing businesses. Now you have context and contrast, because you get, okay, this is the market I am. Here's the variables. Here's how much, the kind of revenue I'm doing, because you have different, even though I say I'm a roofer, I could be a commercial roofer, a residential, a new home roofer. There's different kinds of roofing. So when you go apples to apples and you see what somebody else is doing, you're like, I'm not even scratching the surface of what's possible. And that's what our science proved out from 2009 to 2018, 19 was, if you go by what you know, and it's all you know, and you're talking to the wrong people, and you're getting bad advice, you can feel good about what you're doing, but it's entirely relative to what the opportunity is.
Couldn't agree more. Okay, so just for me, selfishly, right? I've got a real estate development company, construction company. If you were to, in that sector, make moves, grow a 9-figure mindset and make moves, what would be some of the key things you're looking at?
Well, I'd reverse engineer what it takes, 9-figure mindset. First, people have to understand how to define the target.
Yep.
Because if somebody said, I got a 9-figure mindset, that could mean a couple different things to me. One, it could mean I want to build a $100 million business.
Yep.
Another one could be, I want to be worth $100 million. Or it could mean, I want to think like someone who knows how to build a $100 million business, or I want to think like somebody who knows how how to build $100 million net worth.
Let's go with build a $100 million business.
Okay. So you would agree a $100 million business is entirely different than a net worth of $100 million.
Yeah, 100%.
Because I have friends that built $100 million businesses and sold them for $25 million.
Yep.
So you better know what your target is.
Yep.
So to me, I wanted a 9-figure mindset because I wanted to be net worth 9 figures.
Yeah, and it's all about this. Yep.
So if you want to build a $100 million business, you got to ask the question, if I'm going to go build any business to 100 million, what historically are those businesses worth at 100 million?
Yep. And work backwards from there.
And work backwards because you might need to say in the construction space or the contracting space or the whatever space, to be worth 100 million, I need 1 billion of those things.
Correct.
And so you gotta put your plan together.
Yep.
And there's an old adage, people don't plan to fail, they just fail to plan. So people go and show up and they get confused. And plus the language you use, because 9-figure mindset has so many different definitions, you got to pick the one that means to you so you can engineer that specifically.
Yeah.
And if you don't engineer it, then, and for me, I had Papa John, I call him John Strauss. When I was 26, just started my company. He was one of my top mentors. He's still alive. He's 86, 87. He's a beautiful human being. And he's the reason I'm a member of 7 country clubs, because he was a golfer and he was a member of all these country clubs. And as I was growing up, I'd play golf with him because I was a good golfer. And then he'd say, you should join here. You should join here. You should join here. Oh, there's another one. You should join here. Because he knew if you joined early, you were going to pay a small amount of money and you could stay a member for life. So I have 7 country clubs and 6 of them all came from Papa John, right? Because they were where my lockers are next to his lockers. And so he was my mentor, and I just followed the leader, right? Set that mental image, and I followed him. But he said, look, Brandon, you got to understand how money works and how it compounds over time. Warren Buffett at 27 years old was worth $1 million. At 37 years old, he was worth $10 million. Now, we're not talking about how much you pay yourself, net worth.
Yep.
Okay,
Net worth.
That's another target. At 47 years old, he was worth $75 million. And at 53 years old, he was worth $350 million. And what he was pointing out to me is it took him 20 years to go from 1 to 10 to 75. It's not going to happen overnight. And what he was telling me is, he said at 25 million, you can have a nice home and live a nice life. You never need a job again. At 50 million, you can have 2 nice homes, couple country clubs, live a great life, never have to work again. At 75 million, you can have a couple nice homes, take a couple great vacations a year, have a couple country clubs, and fly on an air card half the time private. At 125 to 150 million, you can own an airplane. You can, he laid it out for me.
Yep.
And he said, but you're not going to get to the 75 or 150 because you want it in the next 3 years. You're going to have to invest over time. And thank God he taught me that, because while I was making money in the company that my private equity guys sold out from underneath me, I was taking a little bit of money and investing it in different places. And I had enough to live after they sold the company out between my severance and that for 2 years without needing to have a job.
Yep.
In the 2 years, there was a deal a guy was trying to put together for mini storages, and he and the seller got they had conflict. And he said, hey, if you can put this back together for me, I'll give you a piece of the deal. So I went in and put it. I did get it back together. And then I renegotiated the equity structure and got a little more, and I ended up being a 25% partner. Well, that's been paying me $60,000 a month for 22 years. That's my backstop. And so I started doing that with other real estate deals in the little gap. I created more net worth in the gap of losing my public company and then starting Audigy. In that 4 years of getting things cranked up, I actually learned a lot because I had the time to learn, and I'll make this a different point. I am the person I am today. Now, had Audigy not been sold out from underneath me, I would have been worth 100 to 200 million from that business.
Yep.
It's just really a sad thing. But had I not got the gap where I could recalibrate who I was, what I was going to do, and get back on the saddle and go about it again, I might today not be worth, $350 million, because I might have either given up, I might have messed up, I could have lost my money. There's things, you never know what the past would have been like. You only know what it is now. And this is what I tell people is sometimes be appreciative for those little gaps that give you breathing room, but don't concede. Don't go backwards. Go faster and harder forwards. and pull time and money forward. And that's what I did. So when I sold my lot, I thought I'm going to blow Warren Buffett away. At 27, I was worth 10 million. At 32, I was back only being worth 200 grand. But I never lost the target that at 47, I was going to be worth 75 million. What drove the purchase price for my company was I needed to put $75 million of cash in my pocket, and I knew I needed to take care of my employees and my owners. So I negotiated from a price that got me what I wanted. Had I not had that thought, because when I sold my business, I was 47. We sold for $150 million. After I gave my employees and my customers, I made $90 million. So when you think about it, had I not had that target in my head, I wouldn't have stuck to what I was going to sell the business for.
77 times EBITDA.
I mean, it's insane. Nobody ever pays that amount of money for a business.
Yeah, you were saying on standard, the platform companies are maybe 20, 25 times EBITDA.
That would
right?
be a huge number.
Exactly. So 77.
Blew it away. And here's the better thing. I had a little opportunity for the company that bought us. They were a $1 billion company. And because of what we did to help them, they became $4.5 billion in 36 months.
Yeah, they had you actually in that buyout. You stayed on for 3 years to make sure that
help
could happen.
Integrate it and took it to other countries.
A major win-win. So it made sense that they paid 77 EBITDA because you ended up still making it grow.
Yeah, they went from 1 to 4.5
Yeah,
billion.
so it ended up being a pretty good move for all players involved. Brandon.
And by the way, that was important to me. I wasn't going to go with the deal.
Yeah.
My mentor said to me, congratulations, you did everything you said you're going to do, one of the highest values ever. He said, but you have a new problem. And I said, what's that? He said, if they paid this record price for your company and then it fails, and you're telling me you want to do another 50 of these, is anybody ever going to pay you another record price? And I looked at him and I said, no. And he said, so you have to go make it work. That's why I went and signed the deal with them and went in and did it.
Just like you made it work when the SEC said no 8 times, just like you created the positive pivots there. You just didn't take no for an answer. And I think anyone listening that wants to be a true major entrepreneur needs to hear what Brandon is saying there, because if you want to do big things, you're gonna hit roadblocks inevitably, but you just can't take no for an answer. And that's what you did. And that's what you're doing today, with what you guys did. If you just even look at the ideation from when you sold Odyssey and then what you've created today with Cardone Ventures, the partnerships, etc. That is pure manifestation from idea to creating in 5 years over $500 million of revenue, and you can see that it's headed towards 10 figures. My last question, because I know we need to wrap up, is what do you think the big changes? It took 30 years to get to a 9-figure mindset, right? You were training yourself to get there day in, day out.
Yeah, and it took me 30 years to get a 9-figure result.
Result. You built it over 30 years, that mindset over and over. Yep. Correct. Thank you for that. What do you think the changes that have to be made to go from 9 figures to 10 figures? Yes. Are there mind things that need to change and habit things that need to change to do that?
Yeah, and this is the value of me having a partner with Grant Cardone, because he says once you hit your target, 10x it.
Yeah.
So let me just tell you, anybody that's watching this, I own the domain 9figuremindset.com. That's my first book. It's a trilogy. Okay. The middle book that I'm working on right now is the how to do it all, the mechanics.
Yeah.
I already own the domain 10-figure mindset, because I'll be writing that book in the next 36 months. Because at the trajectory I'm on right now, I'll blow the $1 billion number away, and I'll be $2.5 billion at the rate we're growing right now with what our plans are. So when I write that book, that's why I put the 9-figure mind. I kept kicking the can, and John Maxwell, one of my dear mentors, close friend for 15 years, said, you got to write the first book or you can't set up the second and third book. So I pushed it out. And that's how I got where I was at up to the point of a year ago. My other book is the how-to book. That's about 60% done. And the manifest for 10-figure mindset is about a third done, because I'm laying the seeds for how I made that transformation from hitting the 9-figure, the 100 million number. And now I'm methodically tracking the nuances and the changes I'm going through to go to $1 billion net worth. Although I have so much confidence in what's happening right now that $1 billion net worth is going to be more like $3 or $4 or $5 billion net worth. And if I'm not documenting it, I'm not recording it, and I'm not laying it out, and I'm not teaching it every week, because every week we teach, here's what we did, here's how we got there, here's what we're doing next. Everything I've done is a record, and it's an intentional record, and here's why. There's some really smart people on this planet that teach business and how to grow a business. But I've not seen a single person tracking every single week, every little change, every little comment, every little adaptation, every new mentor, every new strategy, every new technique. So I've been documenting this. That's why I do all our classes. We document all of it from the first one to what, and if you go back to my very first one, 60 months ago, I was saying we're going to do this much and this much and this much. And I was telling people in 60 months, we'll do 125 million in revenue. We are in our 60th month and we're going to do 225 million in revenue. So here's the thing. I want to be the only person that's documented the exact journey, both in paper and in video. So this is why I do these podcasts. This is why I teach every week. Everything's recorded because we are going to have the single most documented process from startup to $1 billion in net worth. And we're 60 months into it. I believe in another 36 months that'll be produced. The book will come out, the video series will come out, and we'll be able to show people. If you have the right mindset, you take the right actions, you're the right type of person, you build it legal, morally, ethically, compliantly. You put the value into the delivery of what you're doing for the people you serve, and you do not compromise, and you never miss targets, and you apply Grant Cardone's 10X thinking. Anybody that chooses to can be a billionaire.
Boom. Fucking shakalaka. You guys just got an insight into what's going to happen into the future. Brandon, thank you so much for giving us the time. I really, really appreciate it. It's super inspiring and energizing for somebody who's early on in the journey to be able to hear those nuggets and to get that type of inspiration. Thanks for making the time for us, for our listeners, and I cannot wait to watch you 10X blow that up. I know it's going to happen.
Dirk, thank you for having me on your show.